and good morning, everyone. We are 2 days away from the official start of the 2018 hurricane season, and Mother Nature got a jump on us with a tropical storm that hit the other day, and the Florida and Gulf Coast. If that's not a reminder that we've got to be ready, I don't know what it is. What is? So we're really pleased today to have a great panel of resources that are available to help guide you in very critical decision making and planning that needs to occur. It needs to be something that's going on year round. So without further, let me basically announce who the panel is today. There's some great allied member representatives who work with us year round on other types of initiatives, and we're really pleased that they've been able to take some time to share with you today. We're going to take an approach first. We'll be speaking with Kelly Sahner, who's with the Senior Vice President of Sales and Marketing with TripMate, which is a partner involved in providing consumer travel insurance, and we've been doing some exciting things with that. We know that there's a reticence by many in the traveling public to travel, knowing that there could be some vulnerability with their plans during the hurricane season. So we want to talk a little bit about how we can help to allay that and help to increase your revenue as a result of that. The second panelist is no stranger to us. Scott helped us with the panel before. Scott Stallmeyer, who's Managing Director for Barbados and Eastern Caribbean for CGM Gallagher Insurance Brokers. And he will give us kind of a macro approach and what are the readiness things and a checklist kind of approach to making sure that you've got all things in order relative to insurance and what you can anticipate. And then finally, a longtime allied member from Smith, Orloff and Associates, Stan Smith, who's an insurance loss consultant. They're a company of insurance loss consultants and risk managers. And Stan will talk to us a little, certainly about readiness, but also about after the fact. What do you got to do to make sure that you're maximizing your return on your claim and you're able to get back into business as quickly as possible. So I'll turn it over right now to Adriana to guide us in the discussion with our first panelist, and that'll be Kelly.
Absolutely. Kelly, are you there?
I am here, and I am ready.
All righty, take it away. Thank you so much.
All right. Well, good morning, everyone. Thank you, Frank, for that great introduction. It's an honor to get to spend a few minutes with you and our colleagues, as well as everybody who's joined us on the phone. And just to give you guys a quick history on TripMe, we've been providing travel insurance solutions for the traveling public for about 29 years now. We were one of the first companies to introduce a cancel for any reason feature. Again, that was back in our heydays of when we started. And as you can imagine, travel insurance has changed a lot over the years, and it's a highly regulated product now that we're proud to say we're always on the other side and making sure we're abiding by all of the rules and regulations that govern an insurance product. And we work with not only CHTA, but we have about 300 or 400 different partners. We insure, on average, about 4.5 million people a year through our various relationships. And some of the CHTA members like Sandals and Beaches and Atlantis and Delta Vacations, they're already offering our product. But what we did here is we created a customized travel insurance product that you guys can offer to your guests. So if they're booking a hotel stay with you or any sort of activity or airline ticket that's going to have a penalty associated with it, they can certainly purchase this plan. They would be protected if they couldn't take their trip or if something happened during their trip. And as Frank alluded to before, we had a heck of a season last year with the hurricanes. We had a lot of travelers who were impacted by the hurricanes, whether they were trying to come to the Caribbean or even if they couldn't even get out of their own house. So we thought this year we really wanted to remind you guys the value of offering the travel insurance plan. So I'm going to walk you through what that looks like. And if Adriana, if you could hit the next slide. Perfect. We like to think of this plan, the way we've designed it, as 1, 2, 3 solution. Guests are going to book the plan, they're going to protect their travel investment that they've made, and then they're going to enjoy their trip. And it's, we're not officially allowed to say this word when we describe travel insurance, but for the purpose of a poor analogy, it does give them a little peace. It gives them a little like, okay, gosh, I've I know I'm coming to the Caribbean. It might be high season for hurricanes, but I know I've purchased this plan. So knock wood, should something happen, how is it going to protect me? And as this slide says, so what does it do for me as the hotelier, as a CHTA member? What does this do? Well, members can sign up for free. We actually have a contract and a relationship with CHTA. You guys, as the hoteliers or the member, can sign just a location form with us. It's very easy to fill out. It's not a binding agreement. Again, our agreement's with CHTA. You provide us with, I think it's 6 questions, who's going to be our point of contact, what's your URL, and then we go ahead and we create a microsite for you so that, and this is all free, you don't have to pay anything, so that you can send your clients to the microsite, or we can provide you with API links, and you can go right in there and have the clients book it themselves, or it can go right onto your booking platform, and then we compensate CHTA, and then they have an arrangement with you that we can talk about later on. But one thing we like to say is it really does provide additional customer service for your guests during this time of if there's a crisis. If there's, a hurricane, your guests don't necessarily, if they're in the thick of it, they don't necessarily want to be answering phone calls like, oh, I'm traveling in 3 weeks. Is your resort going to be ready? This is when, should I cancel? Can I get my money back? That's when you want to send them over to us. Additionally, it allows you to protect your revenue because you can keep your booking revenue from those rooms that are booked and now somebody's canceling because of a hurricane. So you can keep your revenue, and then you also make a profit from offering the plan. You can apply it to your CHTA membership, and we can talk about that later. But it also takes the burden from your staff about having somebody call them up and begging for a refund, or they want a partial credit. All of those folks that purchase the plan, you can redirect them over to us, which is a nice, what's the word I'm looking for? It lessens the burden for your staff. And of course, they can also cover their whole trip. It doesn't just have to be the arrangements they booked with you. They can actually insure their flights, ground transportation, anything that they've rearranged and prepaid that has a penalty associated with it. They can choose to insure it. If they only want to insure the value of their hotel nights, they can certainly do that. But if they want one-stop shopping, the plan provides coverage for their airfare as well. And then once they book it, you guys can relax. You can know that in the unlikely event that we have another terrible hurricane season or something should happen, we'll jump in and provide assistance and refund the customers, assuming they're canceling for a covered claim or they have a covered claim. If you could hit the next one, Andrew, Adriana, I'm going to take you guys, and the next one, I'll take you through the benefits. So typically, travel protection plans, and you may already know this, they provide generally 3 types of coverage. It's going to cover the client's investment, it's going to cover their person, so if something happens to them, and it's also going to cover their baggage and their well-being in that sense. So here, the plan is designed to have cancellation coverage up to their total insured trip cost, trip interruption up to 150% of their trip cost, misconnection coverage up to $1,000, and then travel delay up to $1,000. These are per person benefits. So the plan is purchased just like a health insurance plan. It's purchased on the per person level. So if I have 3 other people traveling with me and we're delayed because there's a snowstorm in New York and I can't get out and begin this beautiful vacation, or there's a bad windstorm, we actually have $4,000 worth of coverage if there's a trip delay that's covered. So it is nice to know that the plan has these really healthy benefit values and potential reimbursement dollars for the insured. If you can click the next one, Adriana, please. Thank you. Oh, look, you moved my slide a little. You threw me for a second. Shows you I didn't look at the slide before you posted it, sorry. The main reason for cancellation interruption that typically happens is somebody gets sick. So the plan's going to cover all of those normal things you hear about: sickness, injury, illness to the person traveling, to their traveling companion, and even a family member that's not traveling. But the really nice feature about your plan is that next bullet under coverage for non-medical reasons. Common carrier delays of 12 hours or more due to strike, bad weather, mechanical breakdown. The bad weather can be a hurricane. If you remember, as you all maybe have blocked it out, last summer, flights weren't taking off to Puerto Rico, to some of these other islands that were impacted. That's a flat-out reason to cancel and then let us reimburse the insured. Or maybe they're stuck. We had some insureds that were stuck. St. Thomas, they kept kind of going around. They were almost like storm chasers. chasers. So we were able to reimburse them their trip interruption costs and get them back home. So there are some other coverages here too. The other thing that's nice about this plan, if you're booking young families, is if a pregnancy occurs after somebody's purchased the plan, the insured has coverage for that. You know, it's something that wasn't expected, and lo and behold, now they need to cancel because maybe the woman will be due at the time they're traveling, or there's something going on with the pregnancy. They're allowed to get their money back. So again, on the right side of the slide, we'll reimburse people up to 100% of the trip cost if they're canceling and the value of what they insured. But if it's a trip interruption, we actually give them a little bit more money. We give them up to 150% because we know they might have to buy a plane ticket the next day, and that ticket, because it's such a short notice, might cost more. So we build in a little buffer there. So that's cancellation interruption. And then if we can hit the next one. This is trip delay and misconnection. And this is simply that the person's delayed, something's happened, one of these reasons will kick in depending on the circumstance. And the point of this coverage is really to get somebody to catch up to their trip and not give up on their trip. It absolutely stinks that they get to the airport and there's a delay. And this can happen on their way home. All of a sudden, again, there's something going on with the plane and the airline cancels the flight. Now they have to stay at the local hotel, get a meal. All of that is covered. So this takes the sting out of that convenience for the insured. Or maybe they're late getting to their trip and they want you to refund the first night of the hotel. They can actually file a claim with us and we'll reimburse them. So this is a nice way to round out protecting their investment. So we've talked about cancellation, interruption, misconnection, and trip delay. So let's talk about the next item, which I believe is medical. So if we can hit it again. Oh, baggage. Better yet. Americans completely overpack. You know, I'm heading off to Mexico tomorrow for another partner event. I'm already thinking about the 4 pairs of shoes I'm bringing with me. I'm there for 3 days. So we tend to overpack. Here, if you hit the next one, Adriana, if you don't mind, baggage and personal effects are simply that you get there and your luggage isn't there. Is it ever coming? It completely disappears. The clients can file a claim for the value of the items in their suitcase itself. We will reimburse them. We'll ask them for receipts. If they don't have receipts from their items of what they purchased that was in there, we'll apply a depreciation factor. Maybe their bag is stolen as they're walking down the street, or maybe they accidentally left it somewhere. There's a claims process we'll go through with them, but assuming it's a valid claim, we'll go ahead and reimburse them. Maybe their bags are just simply delayed. So they get there and they contact the airline, or they contact our assistance company that will track the bag for them, and they've confirmed it will absolutely come. It will come tomorrow evening, but now they have to go out and buy immediate necessary items. The plan will allow them to do that. They buy those items, they keep their receipts, they come home and they file a claim with us, and we'll reimburse them. Again, note what the per person value of the benefit is. It's $1,000 per person if their bags disappear and never come in, okay? So next slide. That's, again, a nice benefit. This coverage is the medical portion, because when we travel, a lot of times our health insurance doesn't go with us. So if I'm in St. Lucia and I twist my ankle, now I have to go to a local hospital and have it looked at and have a cast put on. I want to make sure that I'm going to be covered for that. So I come home, I submit my bills. Oh, can you hit the next one? I'm sorry. I submit my bills to my medical coverage at home. They say, sorry, you're out of the country. We're not going to pay anything. Then I file my claim with TripMate. So the plan has these built-in benefits that if somebody gets sick or has an accident on their trip, we can reimburse them up to $50,000 per person. If there's an emergency evacuation or repatriation that's required, the plan is up to $500,000 per person. Evacuation has to be a medical evacuation, right? Like, oh my gosh, something terribly has happened. We have to airlift this person to Florida. We've had circumstances in the past where somebody suffered a really bad sunburn and there aren't any burn units in the Caribbean. So we move them over to Florida. We get them, we get them settled, we take care of them, and then once they're ready to go home, we then also evacuate them home. If that should happen, they actually would have a medical claim too. So we'd be paying 2 benefits at once for that person, as well as a trip interruption. So you have three coverages working for you at the same time. Accidental death and dismemberment is exactly what it says. It's, knock wood, God forbid, it's a life insurance policy. If somebody should get hurt on their trip and end up passing away, or have a dismemberment occur where they lose an arm or an eye or a leg, the plan pays for that. So again, this also, one thing I should have said at the beginning, but as you can see, and I know my colleagues and our other panelists will talk about this too, this also takes some of the liability off of you as a property, right? If somebody gets injured at your hotel or on one of your excursions, they're going to look to you to pay that bill. Knowing that they've had travel insurance, we're going to cover that for them, assuming it's a covered claim and they weren't doing anything, you know, ridiculous, like robbing a bank and getting shot or something crazy that could happen, driving a moped drunk, something like that, not a good idea. But assuming, again, it's a covered claim, we'll reimburse them, and that, again, takes the pressure off of you to have to cover that person. You could click the next one. One more. So there are non-insurance services built into the plan, and these are the last, yeah, keep going, same direction. These are the other two pieces of the plan, which are really kind of great. There is 24-hour worldwide emergency assistance that's provided by One Call, which is a brand of On-Call International, which basically supplies most of the emergency services for the U.S. travel insurance industry. Take a look at this list. I don't have to necessarily walk you through it, but they do provide medical consultation and monitoring. So if somebody gets sick, they'll help them get to a local facility, make sure they're getting the care and attention they need, work with them to get them home or to return to their trip, depending on the severity of the situation. The nice thing that I love about them, too, is their luggage tracking. If somebody packs a bag and it doesn't show up, you can call them, give them the number from the tag, and they will track it so you don't have to keep, the insured doesn't have to keep calling the airline, or your staff doesn't have to keep calling the airline saying, where's Kelly's bag? Is it ever coming? These guys will do that and then alert you or alert the insured that, yep, lo and behold, it's on its way. It will be there, tonight. So I think that's a nice feature. Then the next slide is our Global XPI, which is absolutely wonderful. If you have folks that are coming to stay with you that you might know they're repeat guests and they have some sort of medical conditions or they take a lot of pills or they have something going on, we highly recommend they use this. It's free. It comes with the plan. globalxpi.com. The guest, honestly, you guys can do it. You log into this website, you give the plan number. It's all confidential and proprietary information. They include the list of medicines they're taking and the ounces and the doses and all that good stuff. And knock wood, if something should happen and they have to go seek medical attention, they can just give the treating doctor their login information, and then they can see all the medications that they're on. I'll tell you a quick story, and I know my colleagues are chomping at the bit here to do their piece of the presentation, but we had a woman a couple years ago who was in the Galapagos who ended up having what she thought was a stroke. So we had to, similar to your situation, it's not easy always to get somebody off of an island and get them to, facilities that have the right medical equipment to assess what's going on. So after a long evac process of hours, we got her off and we got her to the facility, and the treating doctor at On-Call simply diagnosed her in about 10 minutes to say that she wasn't having a stroke. She was just having an allergic reaction to two of her medicines she was taking. She took a seasick medicine that poorly interacted with some other medicine she was on, and that was it. And she would have been fine. Had she used this service, they could have logged in, saw what she took, prevented the evacuation. She could have just went to her cabin for a couple of hours, felt better, and continued her trip. But now she's interrupted this beautiful trip she's planned for years, and now she's on her way home. I mean, at that point she was. Last slide.
And that was it.
Okay, there you go. So I think, and maybe at the end we'll talk about, but really easy to sign up. As I said before, it's free. You fill out a form. We have a relationship with CHTA. We work with them. They work with you behind the scenes. We would provide you with APIs to go right into your booking path or a microsite that you can use to send clients to. It's really fairly simple. We can get folks up and running in a week's time at most. But thank you for your time this morning. I appreciate it. Obviously, I'm going to hang out here, wait till the end, and hear if you have any questions. Thank you.
Okay. Thank you, Kelly. Scott,
Hi,
are
Scott.
you ready?
I am. Hi.
Hi, Scott. Welcome. Take it away.
Thanks, Adriana, and thanks, Frank, as well. And Kelly, thank you as well for opening the session. Obviously, very good information there. So I'll be presenting briefly on the insurance side of it, particularly from a property and casualty side, and talk a little bit about some business continuity. that will be important, particularly from hoteliers' perspective. Just a little brief plug if I can. So, I am the Managing Director for CGM Gallagher Insurance Brokers. We are located in the Caribbean. We're in 8 islands in the Caribbean, and our main hubs being in Jamaica and in Barbados, and then in other islands to the Caribbean. We do have a full dedicated claims team that are on call for any event that may occur throughout the islands, and they have full testimonials of how busy they were up to today, and since September in particular, when we've had those horrendous catastrophic hurricanes. And then we also have dedicated property and casualty and employee benefit services. Just to look at the agenda here, I'll go through a brief summary of the 2017 hurricane season and what we experienced. As I mentioned, a brief chat on business continuity, and then some critical areas of insurance that would be pertinent to hoteliers in particular, and also an update on the claims reporting process and some good information to help you along the process yourselves in the event that you do have a catastrophic hit. Next couple of slides, Adriana. Okay, so what's happening in the insurance market? So as a result of the 2017 hurricane season, I think we'd all be aware that we had some pretty heavy hits from the 3 major hurricanes being Harvey, Irma, and Maria. And according to Munich Re, there were estimated losses from these hurricanes of in excess of $300 billion US. Now, one of the things is that less than half of these losses were actually insured. What you can think of as a good example of this is Dominica. I think we would all agree that Dominica was pretty much leveled, and electricity gone throughout the island, water as well, infrastructure damages, roads, bridges. It really was a state of emergency in Dominica. But the insurance penetration in Dominica is less than 10%. So you have significant losses that were uninsured. Following that, actually, we had our claims team in Dominica 10 days after the hurricane. And what has been very positive is that people are, I guess, aware of the hit that has occurred and are taking on more insurance and recognizing, what, we can't have this happen to us again. And we're seeing this throughout the islands as well, not just in Dominica, but even those that were spared of any damages last year, they're protecting themselves, which is very positive to see. What we've also noticed coming out of this is the reinsurance market. They have, in the 6 years to 8 years leading up to 2017, we've been generally free from any major catastrophic hits. So the underwriting has sort of taken a bit of a back seat, but definitely as a result of 2017, there has been more emphasis being placed on underwriting and assessing risks. Capacity has become a challenge, and we have noticed various insurers in the region are stepping back from the capacity that they have had in the past, where they've said, you know what, we need to assess our portfolio and our risk profile a bit more. And we have noticed where some insurers are saying, we're full. Our plate is full, and they are pulling back from accepting risk in certain areas. Now that opens the doors to other insurers. So while one may be pulling out, we have others that are stepping in. And of course, one of the main questions are rates. And we get this every day, every time we have renewal meetings. The first question out of everybody's mouth is, where are the rates heading? The question used to be, we've seen a reduction in rates year after year. How are my rates going to be reduced from last year? the very simple answer is that's not going to be happening in 2018, and already from the middle of November 2017 straight through to present, we have seen an increase in rates. Depending on the island, depending on the location, and depending on what your rate was for previous years, we're seeing increases ranging from approximately 10, 20%, and in certain islands, in particular those in the Northern Caribbean, increases as high as 60%, and in some cases even higher. Next couple of slides, Adriana. So business continuity. So there are a couple of questions here that a hotelier would want to ask themselves when looking at business continuity. You know, you're a hotel, you're in one of the Caribbean islands, and a hurricane strikes, and your hotel is down for months. A lot of these questions, you know, how important is it for you to get back up and running as quickly as possible? Do you have outstanding loans? You've got payments that need to be made to banks and financial institutions. How are those debts going to be paid when you have no income coming in? What happens if you're out of business for an extended period of time? You know, in a case, for example, of Dominica or any of the other islands, you know, if there's an island-wide hit, where do you source the materials? You could be potentially out of business for far longer period of time than you had originally anticipated. And then you've got the emotional and the financial cost of having to send employees home. Do you want to keep employees on your payroll again in a situation where you don't have revenue coming in? On to the next slide, Adriana. So a disaster is a sudden event such as an accident or a catastrophe, be it a hurricane, that causes great damage or loss of life. Now, regarding insurance, you consider a hurricane and the first thing you think about are tangible losses, the buildings and the contents. But again, loss of income is a major consideration when dealing with a catastrophic hit. And again, the time that it takes to get back up and running, and even if you are operational, you're still losing money in a certain circumstance. So business continuity is a fairly hot topic these days when we are discussing with clients and with hoteliers. And I would strongly urge you to go through the details when you are taking out your policies to investigate business continuity to the extent, as much as you can. Next slide. Okay, so critical areas of insurance for hoteliers. Now, I'll deal predominantly with the property damage, all risk, and fire and perils. So these would cover, but not limited to, fire, lightning, explosion. You have your catastrophe perils, be it earthquake, volcano eruption, hurricanes, floods, and sea swells that would be critical in particular to those hotels and those properties that are beachfront located. The various items that can be covered would be the buildings, the structures, your contents, furniture, fixtures, fittings, equipment, stock, leasehold improvements, and landscaping. Next slide. There are other property damage all risk extensions that may be applicable in your circumstance, maybe not, but definitely things to consider when taking out your insurance. Removal of debris in the event of a loss, professional fees, you've got subsidence and landslip. You would need to consider as well rent that you may be receiving from landlords or tenants on your property. The landscaping we had discussed earlier, and Automatic reinstatement is also a very important topic to consider. If you have a large loss and or multiple losses within the same period, does your policy automatically kick in again in the event that you have had a full loss from a previous hit? It's also important to be aware of the 85% average, and this leads or sort of focuses around making sure that your sums insured are accurate. Next slide. This list again continues on with various extensions that aren't necessarily included in your typical all-risk policy, but definitely consider them and discuss with your broker or with your insurer whether this is part of your policy, and just to be aware of it. Looting is one, and not all policies cover looting. So we did see, for example, in St. Martin, as a result of the hurricane, there was significant looting taking place. Even though there may have been no electricity or utility services available, electronic stores and the like, people were looting various goods. Accidental damage, tools and equipment for employees, manager's personal effects, and then of course just to be aware of the deductibles. Next slide. These are various exclusions that tend to be included in most policies. Everybody's policy will be tailored slightly different, so it's just a case to say, be aware of what the exclusions are in your specific policies and see how they pertain to you. The next slide is the claims process. And one of the major things we want to make sure is that we had touched on it when we had done a webinar at the end of last year, but photos are so important to have on file on your property. A lot of people discuss and think about at the end of a catastrophic event of taking photos of the damage. It's so important to have accurate photos at the best of days. So on a bright sunny day with blue skies out, make sure you have accurate documentation of what your property looks like so that in the event of a loss, you're able to determine where the damages occurred. So the suggested claim flow would be an accident occurs. So you have a hotel, you've got a retaining seawall that comes down due to significant sea swells. That incident is immediately reported in-house to either the manager or the claims department, and they in turn will notify the insurance representative, whether it be the insurance broker or the insurance provider. And from there, they will handle the process, undergo reports and findings to be submitted to the insurance companies. Adjusters may have to be appointed either by the insurer or by the insurance broker. And upon those findings is when we will discuss and seek the settlement of the various claims. From the broker's perspective, we handle the claims on behalf of the client and keep constant information and flowing back and forth between the loss, being the hotel, and the insurance company. And one of the things that's very important to know is it's called, we've sort of classified as a broken fingernail policy, is that every claim should be reported either in-house and or to your insurance broker. You may have something that occurs and you may think it's fairly inconsequential, but you never know where it may develop into a far more significant event. So there is nothing that is too small to be reported. The next claim. Next slide. So what should be reported? Everything. If a coconut falls off a tree, lands on a car, be aware of it. report it in-house, report it to your insurance broker. When should it be reported? Immediately. What should be done following an injury or loss? Only provide assistance if the injuries are very minor. If there's a slip or a fall, you don't want to be held liable where you have been providing assistance and can make a situation worse. And I believe that is about it from my end.
Okay. Alrighty, so we're going to skip on over, yes? These slides. We will provide you again with Scott's information and of his entire team at the end of the webinar. And now we're going to leave you with Mr. Smith. Stan, are you there?
I am. Good morning, everyone.
There he is. Okay. Take it away.
Okay. Great. Thanks. At the outset, I'd like to reiterate that both Scott and I are sincerely glad to provide this series, as we know firsthand how important it is and how vital it is to be prepared and be able to survive a major catastrophic event. As Frank indicated in the introduction, our background, our work basically consists of representing property owners when they sustain an insured loss and help them reach a settlement with their insurance companies, as well as doing risk management work in helping insureds have adequate coverage, both as to dollar amounts and the risks involved. And by saying that, for example, if a hotelier might have, and we'll talk about this, I'll talk about this more when we talk about business interruption, a form of contingent business interruption coverage, but to be able to know, for example, if there's a certain risk of certain suppliers, let's say, that can cause a loss of revenues, to be able to address those things in the risk management phase of the business. And I can't stress enough the fact that if a property owner is properly prepared from an insurance standpoint, as bad as it might sound as to what I'm going to say, it can actually be a major plus for a hotel and other properties. I mean, the last time Scott and I gave this presentation, a hotelier, Magnus Alnebeck from Pelican Bay in the Bahamas, participated with us. And Magnus was extremely proactive and was prepared in the initial stages. And it ended up his property, from just a property standpoint, was enhanced, and he generated a significant amount of revenue at a time of year which he would not have had just by anticipating the need, meaning insurance adjusters and other first aid people have needs for facilities, and having generators brought in advance and getting his staff involved and being very proactive. And I mean, I was at his property, and people would end up taking their showers in the swimming pool, and the swimming pool water would be used for the flushing of toilets and what have you. But if you're prepared and can be aggressive enough, it can be a very positive note. Therefore, you need to understand your risks and understand your insurance policy, and seek the advice of your brokers such as CGM, and be prepared. And I'll take you through some of the more significant conditions of a policy that you should address. And an example of understanding your policy before I move on, because I had two clients recently that were in this situation. They had what I would consider to be full adequate sums insured for all of their coverages, except they bought a sublimit for windstorm in order to try and save some premium. And in purchasing that sublimit, the way the policy language was written, that sum insured was the maximum limit for both property and business interruption. Now, the property owner felt that that sum insured was just for the buildings, but in essence, it was for everything, and they ended up having a significant business interruption coverage, and they had a significant shortfall. So again, you need to understand your policy and consult with your broker and make sure you understand what the coverages are. Yes, a couple questions, if I may, before I get into some of the detail, is, Adriana, is a means by which the attendees can have a raise of hands?
Absolutely. They can virtually raise their hands. Mm-hmm.
Okay, that's wonderful. I'm curious how many of the attendees experienced hurricane losses this past season? Did you have a raise of hands? And,
yep, there they are. We've got only 2 people raised their hands. There have to be more.
Okay. I would think
so we have Ken and Philip raise their hands.
All right. Have your losses been settled at this point in time? And also, later on in the Q&A section, if you have some experiences that can be valuable to the other attendees, we'd love to have you share them. But have you been able to get your losses settled at this point? Is there like a yes or no button?
I guess we'll find out. We can find out during Q&A, but I think we should move forward.
Okay. That's fine. So in the overview, in understanding your policy, and an insurance policy is really nothing more than another contract. So in viewing your policy and trying to understand it, you basically have 4 sections or items in a policy. The covered property, meaning what is covered. The limits of coverage, meaning the sums insured that you purchase. The covered perils, what are you insured for? Is it an all-risk policy? Does it include windstorm, flood, earthquake, tsunamis? And then lastly, the policy conditions, which are significant. If we can go to, I'm going to be flipping through this slide presentation a little quickly because of the time constraints. So, but if there's questions at the end, please ask. The next, okay, covered properties, as Scott enumerated, there's indication here of, buildings, contents, and so on. On covered property, let me mention one thing. In Scott's list, there was a mention of fixtures and fittings. Now, you have to read your policy in regard to that, because if you have solar panels or solar hot water heaters on your roofs, they might well be considered fixtures and fittings and not insured. I've run into that. So just if you have that situation, you can address it with your insurance broker to make sure you have coverage for it. In covered perils, it's important to be aware of the fact that in a hurricane, you can have both wind damages and flood damages. And you need to purchase flood insurance to have that coverage. So in a hurricane, if you have no wind damage to the building, but it's flooded out, you need to have flood coverage. Also, most policies include an exclusion for wind-driven rain. And basically what that translates to is the wind has to make a hole in the building through which the water comes. And the basic reason for having this wind-driven rain exclusion is that insurers don't want to have to pay out claims that really resulted from a lack of maintenance. So if a property is not well maintained and a hurricane, the winds blow rainwater in, they don't want to have to pay for it. Also, while we're talking about covered perils, there's more and more attention these days to tsunamis. And you just have to, if there is a concern on your part to have coverage for tsunamis, you have to make sure where that coverage is provided. Certain forms of a policy will include tsunami coverage in with flood coverage, and others will include it with earthquake. So it's just a matter of asking your broker and then looking at the form itself to know where that coverage is. The next slide, please. Right. This is a list of important policy conditions that you need to address when you do your policy review and go over it with your broker. The most important is to have replacement cost coverage as opposed to actual cash value coverage. Property owners that want to save money, if the property isn't that profitable, might select actual cash value because it'll cost less. The difference between the two is even actual cash value, it'll start with replacement cost, and then a depreciation factor is applied. So, simple illustration, if the building has to be painted as a result of the hurricane, and you typically paint it every 4 years, and that question can be asked of you, and you're 2 years into that 4-year period, an insurance adjuster might try to depreciate the cost to paint by 50%. So if it costs, he's willing to say, fine, it's going to cost you $1,000 to repaint this building, but you have actual cash value coverage, he'll pay you $500. Another very significant issue is coinsurance or an averaging clause that's in a policy. And some examples of that are, and I guess I'll take you through some numbers. Let's just say you have a sum insured of $800,000 on a building. That's the limit of insurance. And if there's a 80% averaging clause or coinsurance clause, that really means that the replacement cost is $1 million, because 80% of $1 million is 800,000. So in essence, you're saving premium, you're assuming some of the risk to the extent of $200,000, and it's a means by which you could say insurers want to be properly compensated in the form of premium for what is at risk. And let's just say you have a loss, and the adjuster will adjust the loss and say, okay, I agree, it's going to cost you X amount of dollars to restore the property to the condition it was in before the event. And then they'll determine what the value at risk is, what the replacement value is. And if replacement value is, let's say, arbitrary numbers, simple numbers to follow, $2 million. 80% of $2 million means your sum insured should have been $1.6 million. The language related to the averaging or coinsurance clause says you then form a fraction, the sum insured of $800,000 being the numerator and $1.6 million being your denominator. That's 50%. So whatever is agreed to as to what your loss is, you'll only get paid 50% of that amount. So it can really create a big uninsured loss situation for a property owner. Now, to avoid this, one of the things that can be done is to get what's called an agreed value endorsement, where you might, in all probability, have to obtain a replacement cost appraisal on your property, not market value, and then present it to insurers and get an agreed value endorsement. That does away with any possibilities of being penalized for being underinsured. And at times over the years, I could tell you, I've had the experience of dealing with some very aggressive insurance company adjusters who, at the time of the loss, insisted that the values were understated, the sum insured was understated, and it cost the property owner some money in the way of insurance proceeds. But the following year, after we had handled the loss, we suggested to our client that they get an agreed value endorsement, which they did, for the same sum of money that they had at the time of their loss. So I guess that just points out the importance of it.
Stan, we need to move things along a little bit because we're almost out of time, and we need to give people time for the Q&A.
Fine, okay. Let's go to business interruption, which, well, here's a section on maximizing claim settlement. As Scott mentioned earlier, it's extremely important to have photographs both before the event and the beginning of hurricane season. You know, it's a nice sunny day. If the property presents well, take photographs, particularly if you've had losses in prior years. So now that we're entering a new hurricane season, if you had claims in 2017, you might well be asked to provide documentation in a way of invoices as to that you did do the repairs. And another means by which to try and satisfy adjusters that the work was done is take a lot of pictures if the property has been reinstated properly and it looks great. And in the adjustment process, trying to get the loss settled, you need to participate and discuss what insurance people refer to as an establishment of a reserve as to what they think the loss is at the outset. Because once reserves are established by an insurance company, if it ends up your claim exceeds that reserve, it presents issues in getting things done on a timely basis. Let's move on to business interruption at the end, Adriana. Business interruption is basically defined as, there's two ways to define it. Net income plus your continuing expenses, or your lost revenues less your non-continuing expenses. And just a simple illustration so you can get a handle on that. Let's just say you have revenues of $1 million. Your variable costs are $600,000. Your fixed costs are $300,000, which means you have a pre-tax profit of $100,000. The amount of, and you're totally shut down. And that's the way you gauge how much in business interruption insurance you should purchase. So in this case, you should purchase a sum insured of $400,000 to be properly insured. And to say it another way, so you can grasp it better, is if you're totally shut down, you have your continuing expenses, so you're going to have a loss of $300,000 because you have no revenues. And what you're purchasing business interruption insurance for is to have the income that you would have otherwise had. So if you have these continuing expenses, which generate a $300,000 loss, you have to add in the income that you would have realized, and that's how you get to the $400,000. Now, the claim process for business interruption gets tricky as you have partial operations. And at the Chief, we're going to be doing another presentation on insurance, and hopefully we'll have some time to delve into that. But also recognize the need for contingent business interruption coverage. So for example, if your property is not damaged, and to have a business interruption claim, the insured property under the policy has to be damaged. So consequential business interruption kicks in when the property is not damaged or item of an indirect nature, which I'll explain. Two really good examples are loss of off-premises power and or water. I mean, if you don't have electricity, you could be shut down. Of course, there's alternatives to having generators and extra expense and what have you. But there's also been situations where certain hoteliers might have certain suppliers, and if the supplier has damages as a result of an insured peril under your policy, even if it's a fire, and you can't get certain supplies from that vendor, it might impact your revenues, and that's something that you could have contingent business interruption coverage for. And I guess the last thing, period of restoration, you can have alternatives, but typically it's going to be defined as a period of time with due diligence and dispatch for you to get back into operations. Now, some property owners that want to try and save on premium might purchase business interruption for a shorter period of time than 1 year. It could be 3 months, 4 months. Some properties actually purchase a significant amount of business interruption coverage that goes beyond the restoration period. So again, you have to evaluate your situation and your risk, and it's something to discuss with your brokers, such as CGM Gallagher. Adriana, I guess I'm out of time, so I'm going to stop there.
Okay, well, perfect, because we can go ahead and get right into the Q&A. And let's start. So anyone, if you have any questions, go ahead and put them into the chat box. And I'm going to start out with a few questions that have come in here. By all means, all three of you, if you guys have anything to, all three of you, these questions are open to all three of you. Whoever wants to respond, go right ahead. So let's see, let's start out with, well, the first question was actually already kind of answered by Scott, but questions about the rates. How have rates moved since the 2017 hurricane season? That's a big concern for all of our hoteliers.
Yes, and not just for hoteliers, but I think just across the board, through the simple guy with a house, with a 3-bedroom house, has been where the rate's heading, because as I'd mentioned, we had seen declining rates for the last 6 years and even longer. So a lot of it depends on, first of all, what your rate was in the past. So from a percentage perspective, in Barbados, for example, you were looking at rates for inland property of about $3 per thousand, which was a typically quite a low rate. So that rate has gone up to about $4 per thousand now as a result of after the hurricane season. So that's a 33% increase, which is quite substantial. And they're sort of set at about that $4 per thousand rate. However, if your rate prior to that was, say, $3.75, then the increase is less than 10%. So from a percentage standpoint, a lot depends on what your starting rate was. But generally, across the board, we have seen increases in Barbados where we had no impact from the hurricanes. But again, the Caribbean gets painted with a broad brush, and the reinsurers look at the region as a whole as such.
Yeah, and let me add, Scott.
Okay, let's see. I have a question. This one, I'm sorry. This is one for...
4 times. What? Go ahead, Adriana.
Hello?
Hello?
No. Go ahead.
Yes.
Yeah.
Oh, okay.
Go ahead, Sally.
Some of my clients are experiencing... Oh, yeah. I'm speaking. Can you hear me? Hello?
Absolutely.
Hello?
Yes, sir. We can hear you.
Okay. Some of my clients... Wonderful. Some
We
of
can hear
my
you, Stan.
clients are experiencing premiums that are 4 times. Okay. Some of my clients are experiencing premium increases of 4 times what they were before the storm. You've got to recognize before this past season, there weren't significant storms in the Caribbean and rates really got soft. So the rates are kind of going back up to as high as where they were back in the, early 2000, late 1990s. That's it, Adriana. Go ahead.
Okay. All righty. We have a question here, and this one, it seems it's for Kelly. It's about the travel insurance offered that the hoteliers can offer via TripMate. And the question is, what do I do if a guest has a claim? So say they get they get TripMate insurance for you put it in the booking path. What happens then if somebody comes with an actual claim? Do they come to the hotel, or what do they do?
Sure. So, if they're going to cancel, they obviously want to notify the hotel that they're canceling, but then the hotel would direct them to contact us at our 800 number or our local number, or to go on our website at tripmate.com and start the claim. And then the whole claim process itself should take about 4 to 6 weeks at most. We'll send them out some forms they need to fill out. They submit their documents. It's all online. And once we verify and have proof of the loss, and again, if it's a medical or a baggage, we're going to ask that they go to their primary coverage first, and then whatever isn't covered, we'll pick up and make them whole. That easy.
Okay, so in essence, it takes away the trouble of cancellation. It takes it off the hotel and puts it on TripMate, pretty much.
Correct. Exactly. And so the hotel gets to keep their revenue from that
Kelly, are you there?
canceled booking. So let's imagine I'm going to be somewhere next week. I break my leg today. Yeah. Can you hear me now?
I can, yes.
Can you hear me, Adriana? Okay. So, and I don't know if you
totally
actually heard
can,
my
yeah.
answer, but what I
There
was saying
seems
is
to be
all
a
the
bit of a
client has to do
delay,
is file their claim with
I apologize.
TripMate.com. Okay. No, that's okay. So the bottom line is the pressure is off of the hotel. The hotel gets to keep their revenue from that cancel room booking, and then they just direct the insured or the guest over to our office, and then assuming the person is canceling for a covered reason, we reimburse them whatever they paid that they were penalized and didn't get back from the hotel or the airline or any other prepaid arrangements that they made.
Wonderful. Okay, cool. We have one more question, and we're going to have to close it at this question. But feel free, if you have some questions or concerns, and we did not have time to address it in this webinar, feel free to reach out to Kelly, to Stanley, to Scott, and they'll be more than happy to give you more information. And we will provide all of their contact information, this recording as well as the PowerPoint, to you in shortly. You're going to send it to you via email, and it's going to be available also on our website. So this is the final question. Some policies include looting. What's the difference between looting and burglary? Are they the same thing?
So while the events are pretty much the same and the circumstances are the same, but the difference between burglary and looting, where that burglary can happen any time of day, any time of the year. It can happen, whenever. Whereas looting would be classified as looting at the event of a state of emergency, so post-hurricane or post-earthquake, or there has been some event that has occurred that would trigger an insurance related issue, and then that would be called looting. So it's really out of a state of emergency.
Okay, and would burglary normally be covered in a policy versus looting?
You would have to specify it. Many policies don't include looting. So the short and the quick answer to that is check your insurance policy and determine whether looting is actually included.
Scott, how about like vandalism? Would you kind of consider vandalism and looting as almost the same?
Well, the vandalism, I wouldn't necessarily consider it the same. You would have to check your policy to see if vandalism is included. It usually is, but the looting in particular would be out of a state of emergency. The vandalism, that can occur anytime, and that would be covered. Vandalism in a state of emergency would typically kind of be considered as looting, and again, you would have to check your policy to ensure that it is included, and it can be included. So, I think coming out of Dominica and St. Martin and seeing the looting events that occurred in those islands, it is something that you definitely would like to protect yourself against. Looting is a real occurrence that you definitely want to be protected against.
Yeah, Scott, for example, I have one large client where because of government-forced, I can't think of the word now, everybody was told to stay off the roads and what have you and go home. There was some vandalism where a building envelope was broken, and it allowed the hurricane to get inside the building. And, the question we're looking at is, the extent of the vandalism claim versus windstorm. So,
right, interesting. Right, so the vandalism would have helped contribute to the loss.
Yes.
And would have been in a state of emergency situation, yes.
Yeah. And
very interesting. It would all depend what the policy spoke to. That would be very interesting to know how that proceeds.
Agree. I'll let you know as time passes.
Thank you.
All right. Well, with that, we're going to wrap up today's webinar. Just a quick reminder that tomorrow is the last day where you could take advantage of early bird registration for CHIEF. And CHIEF is our educational forum that will be taking place in Miami from from June 22nd to 24th. And we will have actually a session dedicated to insurance, everything you don't know about insurance. And we know how very important it is. And so you will be able to actually, Stan will be one of our speakers in that session, so you'll be able to meet him, pick his brain, get a wealth of information from him when you attend Chief. But go ahead and get your tickets between today and tomorrow so you could take advantage of that early bird registration. Again, thank you so much, Kelly, Stan, and Scott, for giving of your time, giving all of this wonderful information to our members, and thank you again for just all that you contribute.
It's our
Thank you
pleasure.
very much. Appreciate it. Everyone have a great week.
Very welcome.
All righty, we will send out an email shortly with all of the information. You'll be able to reach out to these three folks. And thank you again for participating. Have a wonderful day, and we will see you in Miami on June 22nd at Chief.